What if I told you that one of the most important shocks in the financial system right now, isn't happening in stocks, crypto, or real estate, but in something most people stopped paying attention to years ago? Silver. Not the kind in jewelry stores or family heirlooms, but the silver quietly sitting behind futures contracts, industrial supply chains, and government reserves. Because while most investors are watching headlines scroll by, something unusual is happening beneath the surface. Prices are whipping back and forth, physical supply is tightening, and whispers are growing louder about whether the United States might be forced to step in. And if you think this is just another temporary market move, stay with me, because what's unfolding could reshape how silver is priced, owned, and controlled in the years ahead. In the last few weeks, silver futures have been moving in a way that feels almost violent. Sharp drops followed by sudden rebounds, huge volume spikes with no clear news catalyst. Traders are getting shaken out, retail investors are confused, and yet, behind the scenes, demand hasn't gone away. In fact, it's growing. This kind of whiplash usually shows up when paper markets and physical reality start drifting apart. Futures say one thing, warehouses say another, and industrial buyers are starting to feel the pressure. That's when markets become dangerous, but also revealing. Before we go deeper, if you find content like this useful and you want calm, clear explanations of what's really happening in global markets, make sure you like this video and subscribe to Finance and Global Economy. It helps the channel grow and it ensures you don't miss what's coming next, because stories like this rarely stay quiet for long. Now, here's the part most headlines won't explain clearly. Silver isn't just an investment metal, it's a critical industrial input. It's used in solar panels, electric vehicles, medical equipment, semiconductors, and advanced defense technology. Unlike gold, most silver gets consumed. Once it's used, it doesn't easily come back. Recycling helps, but it's slow, expensive, and limited. That means when demand rises faster than supply, inventories shrink quietly until suddenly they don't exist where they're supposed to. Futures markets are built on the idea that metal will be available later. But when too many claims exist on too little physical supply, prices can stop behaving logically. This is where the strain starts. Large institutions can roll contracts, hedge exposure, and absorb volatility. Smaller traders can't, and industrial users don't care about charts at all. They care about delivery. When manufacturers begin to worry about future access, they lock in supply early, even at higher prices. That creates a feedback loop that paper markets struggle to control. What's especially interesting right now is how quickly silver inventories at major exchanges have been declining. This isn't about panic buying from the public. This is about steady withdrawals. Silver leaving vaults, bars being reassigned, deliverable supply shrinking while open interest stays elevated. That combination has historically preceded moments where markets are forced to reprice reality, and this is where the idea of a possible US stockpile enters the conversation. The United States already stockpiles certain critical materials for national security. Oil is the most famous example, but it's not the only one. Strategic materials matter more in an era of supply chain instability, geopolitical tension, and technological competition. Silver sits at the crossroads of all three. Energy transition goals alone require massive amounts of it. Solar infrastructure doesn't work without silver. Defense systems don't either. If policymakers begin to view silver not just as a commodity, but as a strategic asset, everything changes. Governments don't buy like investors. They don't care about short-term price swings. They care about availability, control, and long-term security. Even the discussion of a potential stockpile can shift market psychology. It signals that supply risk is real, not theoretical. Now, let's talk about why this matters to everyday investors, not just institutions. When futures markets dominate price discovery, they can suppress or exaggerate moves temporarily. But physical shortages eventually force adjustment. You can't print silver. You can't digitally settle a solar panel. At some point, metal has to exist. When that moment arrives, volatility doesn't disappear, it accelerates. We've seen this pattern before in other markets. First comes disbelief, then denial, then sudden repricing. The people hurt the most are those who assume stability will last forever. The people who benefit are usually the ones who paid attention early. Not because they predicted the exact outcome, but because they understood the risk. What's happening now doesn't mean silver is guaranteed to explode higher tomorrow. That's not how real markets work. What it does mean is that silver is entering a phase where fundamentals matter more than narratives. Supply chains matter more than sentiment, and physical reality matters more than paper promises. This is why silver keeps coming back into the conversation, even when attention shifts elsewhere. It refuses to stay quiet. Every time volatility hits, more people start asking uncomfortable questions. How much silver actually exists? Who controls it? And what happens if too many people want delivery at the same time? As we've discussed many times here on finance and global economy, the most important market moves often begin when confidence looks strongest, when systems appear stable, when risk feels distant. That's usually when pressure is building underneath. As we move closer to the end of this video, I want you to think about this. If silver truly becomes recognized as a strategic material rather than just a tradable asset, how do you think markets will respond? How do you think pricing mechanisms will change? And who do you think benefits most from that shift? If this video made you see silver differently, share it with someone who still thinks commodities don't matter anymore. And let me know in the comments what you think happens next. Is this just another futures shakeout, or are we watching the early stages of a much bigger realignment? I read your comments, and they often shape what we explore next. Thanks for watching, and I'll see you in the next deep dive.